Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. As always, folks, no BS, just charts here. We're going to go through the data. What are the charts telling us, which basically gives us what the probabilities are that a move is going to occur. So let's, without delay, jump right into the charts. This is the S&P futures chart. Now, this is the 10-minute chart. And I show this basically to get our grounding of where the market is to start the day. We're about 30 minutes away from the stock market opening. And we can see that again in the overnight, this was the overnight right here. We kind of were trending up and then we've trended back down and we've gone sideways. So all in all, markets compared to yesterday's close, we're going to open slightly higher on the day, but basically a neutralish to slight positive open. Now, if we flip over to the S&P chart and we take a look at the daily, this is a trend line that I've gone over with you guys pretty much every single day now for the last week. This is from our key low here, which was on April 7th, to the low here on June 23rd. And what we can see is that on July 15th, we broke below it. Now, we have not confirmed a breakdown just yet. So what does that mean? Well, again, as I've said many times over, this white trend line, when you don't confirm above or below it, in this case below it, it's only minor resistance. And again, we can even see how it is holding, but the markets are still able to slowly grind up with the extreme optimism. And I think that's an important point here, is that right now we're dealing with, you have two different forces. Earnings are coming out where, frankly, most stocks are selling off on earnings. Yes, Google/Alphabet was up, but it was up a whole just 1% on earnings, while Texas Instruments fell over 10%. And we had many, many others like Tesla yesterday falling dramatically on the back of earnings. So in general, stocks have been priced to perfection to where even good earnings are causing selling. But the animal spirits that are keeping retail kind of pumping money in and using leverage are continuing to keep this market up. Now, if we look at the charts again, one of the things that this tells us is that the markets are vulnerable, but vulnerability does not dictate immediate downside. So yes, we're below this key line. And as long as we stay there, the markets kind of are basically hanging off the cliff. They're not falling yet, but they're hanging off the proverbial cliff. And so again, that kind of mindset is very important for me as a trader and as an investor to just understand where the markets are. Yes, we're essentially at all-time highs, but the market's again continuing to kind of be vulnerable to a bigger drop to the downside. All right, let's look at the US dollar here. The dollar is bouncing just a bit today. So again, the dollar is moving up. Yesterday, Trump did tour the essentially the Federal Reserve building, right? And we know he was kind of up in arms about the cost overruns of the renovations that are going on there. And essentially what he said is, listen, this isn't a fireable offense. And so it basically walks back those threats on the Fed Jerome Powell firing. And I think that, again, is creating a little bit of small optimism that the financial structure of the U.S. is still, for now, intact. Well, granted, we'll probably get more threats after next week's Fed meeting if Jerome Powell doesn't lower rates. But just again, today the dollar is inching up just a tiny bit here. And you can see it right here, inching up a little bit. All right. The 10-year yield remains in a tight wedge pattern. So this is the daily 10-year yield. And again, wedge patterns are important because they squeeze price. And when you squeeze something, think about a rubber ball. Eventually, if it breaks out, it shoots in one direction. And that's really what we're following here. So we still have some more kind of price action on an interim basis to see if we test this high end around 4.52 or this low around 4.3. But essentially, at some point, yields are either going to make a big move up or a big move down. And we can tell just by following the trend lines which way breaks and confirms that should be the big move in that direction. Intel today, it is trading lower. You see it on my screen here on the daily chart, trading at $20.70. If we go to the intraday, you can see that initially Intel, when they reported earnings, popped to the upside, and then it's just been down, 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 down. And so again, this is another, I wouldn't call this a big earnings report. Intel used to be a major player in the semiconductors. They're kind of a second-tier player now because of all the troubles that they've gone through. But for the most part, we've seen a lot of these semiconductor stocks selling off on earnings, yet we've still seen NVIDIA hold up relatively well as the leader of the group. However, this is important, guys, and we'll come back to the Intel level, but this chart gets my attention. And you might say, wait, why? Well, because you have this wedge, this upsloping wedge that has broken Just like the S&P, it has not confirmed to the downside yet, so it's not a confirmed breakdown. But we're starting to make an inside bar pattern here, which again is a bearish pattern. And so when you have a big move down in a market or a stock, and I guess I wouldn't call this a big move down, but comparatively, it was the biggest drop that we've seen in the semis in quite some time. You then see these little bars that are inside. And this pattern in technical analysis is called a bear flag. Now, it is preliminary. We only have 2 candles of the bear flag at this point, which I'd call kind of an immature bear flag. But nonetheless, I would look at this as having more of a bearish tilt to it, even though, again, if we look at NVIDIA is really hovering right at this little pivot top here, right at the upper ends of 2 major trend lines. Now, if we look at NVIDIA pre-market is down just a little bit, so we'll continue to monitor that. But again, at this point, we'll watch and see where things go. But I'm looking for an overall drop in the semis here. Again, more and more signals, more and more lead weights are coming on, whether it's Texas Instruments, whether it's other companies like Intel reporting. We've even seen a few other second-tier companies report, and most of them have traded to the downside on earnings, or even if they were good news, many of these stocks that were semis that reported, again, opened higher and then went to the downside. Good example of this, guys. Look at this. This was Texas Instruments. I showed this chart the day they reported or going into earnings. We popped up here. So it actually did have an update on earnings. And then look at the subsequent days. Down, 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 and then bear flag back below this key trend line. So again, just something to monitor there. All right, on to Intel again. Let's flip back to Intel. I just want to give you my trading level for the day on Intel. The aggressive level is going to be basically at $20. There's a gap fill here. This, again, will be an aggressive day trade only level that I'll be monitoring to see if I want to take it in the live day trading room with members. For a swing level, I don't have much in the near term, but my next level here is 1936. So again, day trade and day trade. These would both be day tradable levels for me. Maybe I would consider down here at this low pivot at 1775 a potential bounce on Intel, just because, again, that would be a major double bottom. So I would say this is your one potential swing trade long level. These would be just day trade long levels today on an intraday basis. All right, flipping over to retail, Decker. Decker, again, reported earnings. Notice how the stock has been beaten down. So what does that do? It means that the bar for basically improving or impressing retail and institutional investors is low. Sure enough, the stock is up. But what's interesting is it popped massively, came back in, and it is settling up, but not up a lot. In all fairness, again, closing around 105 yesterday, it's about 117. So it's about 10% to the upside. But again, certainly off of the highs from initially yesterday. Now, as a day trade, I'm very hesitant to short something that's been beaten down, because these are the ones that can short squeeze. The only level I see, there's a gap fill up around 126. I might mess around there and do a quick day trade short. But aside from that, I am not looking to counter trend trade Decker on the day. Next up, we have CNC, a healthcare stock here, Centene. The stock is down, or at least was down initially. Wow, it's bouncing back. So look at this intraday, guys. Wow, look at that. So initially they reported earnings. The stock tanked to 22. It's now popped to 28. Holy cow, what a move. So again, impressive reversal there on Centene. Now look, the stock was beaten down. And so again, when you have a stock like this, always remember, folks, our general psychology makes us scared of these plays and says, oh man, the stock has gotten beaten down so much. What's the bad? This is going to be bad. But in essence, it oftentimes works the opposite way, where bad news is already priced in, which looks like was the case, right? The stock initially cratered, and then people said, you know what? This is already factored in. And then all they have to do is say one small positive thing, and then the shorts begin to cover, and it begins to go up. And by no means does this mean you buy every stock going into earnings that's been beaten down. But if you analyze it long term, you might be able to find some key levels to play on the long side. And again, this one I have call options on, so I'm glad to see it popping up on the back of earnings here with smart money options traders. All right, flipping back again to the chart, it's not up enough for any shorts, just like we talked about on deck. This would be one where it would have to pop massively. I mean, literally back to 37, probably the gap window. before I would feel comfortable even thinking about a short because it is so beaten down. But nice move today. Good bounce back on Centene right there. Charter Communications, again, we have a nice drop on earnings this morning. It already filled this gap here and it's below. That means that is no longer valid for a trader. Instead, you go to your next big pivot, which is obviously this low here in this area right there. So as a trade today, I will be eyeing probably the 116 down to the 112 level for a potential day trade. And what we can see here is if we bring this chart out here, look at what level this actually coincides with a longer term technical support. So there should be support here right around 316 to 312. All right, let's turn our attention to Bitcoin. Bitcoin possibly breaking the bear flag. I love this because a lot of traders and investors, retail crowd, were constantly saying to me on my comments, they were like, all right, well, this looks like a bull flag to me, right? Up and then sideways consolidation. That is kind of a bull flag, right? But this is the nuance that literally will make you millions over the course of your trading career. This is something that took me years to discover, and this is something I pass along to you guys. You always go from the predominant pivot point, all right, or factor. And when you have a topping tail, which is a bearish reversal signal, that's the one you take in the short term for the next move. Now, listen, we could see Bitcoin break down here and it still could hold its bullish pattern here and eventually make another move up. But the short-term move was favoring the downside. And that's what we're seeing today on Bitcoin, trading around 116,000. Nice little drop in the overnight. It's interesting because, again, the stock market's not really falling yet. But again, Bitcoin is showing some signs of weakness. Could Bitcoin be a leading indicator for the stock market? Obviously, we'll keep an eye on that. All right, let's quickly look at ETH here. So ETH, again, basically just consolidating. Now, again, you don't have a topping tail here. So this actually could be bullish consolidation because the bigger pattern is up and then consolidating like this. And you can see, again, big move up here. Here's your flagpole and consolidating. So interestingly enough, at least in the near term, I would give a slight bullish bias to ETH, but only up to this trend line. All right. Then I would have to reevaluate. So you can see the down sloping trend line here. Really, the line is right around 4,000. That would be your short-term resistance level. Obviously, any sort of major retrace down to 2,800. Notice that would be a retrace to the scene of the crime. This was a beautiful, kind of like a small inverse head and shoulder breakout. This would now be major support on the ETH chart. Let's take a look at gold. Gold, amazing, folks. Gold is breaking lower. Again, I've kind of favored the downside just a little bit. So again, I did go short with commodity members, and I added right here. I called the bluff on this move on gold. I said, this is only the third hit. What I teach in the Winning Trader series, guys, is that the amount of hits on a trend line are directly related to when you start expecting a break to the upside or the downside. So one of the things we know is that 1, 2, this was only your third hit. The odds of it breaking on a third hit are very, very low, probably about 30 to 35%. And so I took those odds and I said, you know what? I'm going to add to my short on gold right here. And lo and behold, we're actually in the money pretty nicely on this trade now, as it looks like it may break down. Now, listen, it's still early in the day, so we'll have to watch and see where things go. But a close below, then we need to see confirmation. If we see confirmation, first support, you'll have a little support around 3250 on gold, 3250. But then really you could be looking at 3140 and possibly even the $3,000 level. And yes, I still am amazingly bullish longer term on gold. I just think, again, it's due to wipe out the weak hands. A lot of weak hands have come in the market and bought in on gold near these highs. The market has a tendency to really wipe out those weak hands. They want to flush those weak hands out and then continue on its merry way to the upside. All right. Next up, let's look at silver. Remember, silver was into key resistance here, and we can see. Now, what's interesting on this chart, and this is really important, another great educational point, is that you have this long-term trend line. You hit it here, and you put in a topping tail. Then you came up here and closed above the topping tail, which negates the power of the topping tail. But would you flip bullish there? The answer is no. Why? Because you haven't taken out this long-term trend line. What's more powerful, a topping tail or a trend line that goes back to 2022? I would say a trend line that goes back to 2022. It's proven itself for now almost 3 years that it's capped price on silver. So I have to respect that, even if I like silver longer term. And sure enough, price is pulling back off of silver here. Nice little pullback on the chart today. Now, again, it could break in the next couple days for all we know, but at least for now, we keep our biases to ourselves and the charts rule the roost. Okay. Oil, let's take a look at US oil today. Oil is retracing. Here's your bear flag. I talked about this for the literally a couple weeks that's what was forming. We broke, we confirmed. We did well, did we confirm? Let me see. No, technically we didn't confirm, but needless to say, this line still is minor resistance. And so far it is respecting that. If you look closely, we kind of went up to the underbelly just there and are stalling out. I still think this is a very bearish pattern, but again, you haven't confirmed to the downside. So we just have to monitor this trend line around 67 to see if it breaks back above and reestablishes the bear flag pattern or not. All right, lastly, let's take a quick look at natural gas. Natural gas here, folks, broke below the line, still hasn't confirmed. So this is only minor resistance. It's still resistance, though. And we're just chopping here. First support is going to be around 299. For me, I'm not trading that just because, again, the chart setup isn't perfect. Not that any chart setup is ever perfect, but you have high probability versus medium probability. This would be medium probability to go along at 299. Might work, might not. One thing just to note, how many hits of this trend line? 1, 2, 3. This would be 4. 4, you have a 50-50 chance of breaking on the fourth hit. And so for me, I'm not going to take a gambler's odds. However, if we come down here, this would only be the third hit. 1, 2, 3. So if it flushes into here, the odds of a bounce would be very solid. All right. I hope you guys are kind of understanding what I'm teaching here, what I'm laying down. Because again, this is like literally changing your financial future type education here. And I obviously love to go over what the charts are telling us and what the levels to trade are. But the goal here is to really give you guys a foundation to build off of where you can start increasing your odds of success in all the trades. And again, I always say to people, you never know when I'm going to retire or something's going to come up where I can't do these and teach you guys. So I always hope that you guys take advantage of what I do. Free is great. That's what these game plans are, but also obviously the step up at the right time. So you guys can join obviously Smart Money Stocks. I do daily videos in there, commodities, crypto, as well as options. And then obviously the next step is the education. We have so many good courses here at Verified Investing. It's all charts and probabilities, no nonsense, no biases, no nonsense of crazy, ridiculous targets like $1 million on this or whatever. It's what are the odds telling us? And if you change your mindset to that, you literally change the game and you'll change your financial future. All right, guys, thank you so much for diving into the charts today with me here on the game plan at Verified Investing. Please follow us on the socials. Come check us out at verifiedinvesting.com. And I hope to see you again later. Have a good one. Take